Well, the Abbott government is celebrating its second anniversary, but the corks aren't popping over a sluggish economy and tepid growth. The man charged with spruiking the economy is Finance Minister Matthias Corman, and he joins me from our Parliament House studio now. Minister, welcome.
Good to be here.
Can I go to the G20 first? The government's target of an additional 2% global growth last year drew some scepticism at the time. Now we've got the IMF having lowered growth forecasts. Was it ever a credible figure?
It's not just the government's target, it's a target that we put forward as, when we held the presidency of the G20, but it's a target that was embraced and adopted by all G20 countries. And of course...
Nevertheless, it was the Treasurer's, it was very much the Treasurer's move pushing it forward, wasn't it?
And it was a very important move, if I may say so, because it has focused the minds of governments around the world, representing about 85% of the world's economy, the leaders and finance ministers of G20 countries around the world, on the need to plan for stronger growth and more jobs. And indeed, by putting that target in place, by focusing governments' minds on the necessary reforms to achieve 2% growth above business as usual by 2018, of course, much more has been done than would have been done otherwise. And as the IMF and the OECD and others also have made clear, we all remain committed to strengthening growth and to achieving that 2% growth above business as usual target by 2018.
Well, I'm just wondering how achievable is it and whether we should keep talking about this. I mean, for example, the global infrastructure initiatives that have been put in place. I mean, we're looking at now very, very fragile markets in emerging economies.
Well, we should keep talking about what we need to do to strengthen growth, create more jobs and create better opportunity. Of course we should. And we should talk about the aspiration as well as the specific plans and activities that are being put in place by countries around the world to get there. Of course we should keep talking about it.
All right. Well, there's a new pledge, of course, from our latest finance minister meetings, and that's to stop the currency wars. Now, if US rates do rise, perhaps even this month, and capital still drains from China, what confidence is there that currency wars won't continue?
Well, look, I'm not going to provide a commentary on currency wars. I'm the finance minister looking after the expenditure side of the budget and macroeconomic reform. I'll leave commentators and analysts run.
But clearly currency wars make a great deal of difference to running an economy like Australia's.
Well, Australia is a trading nation, and obviously what is important for Australia's future success is that our economy is as competitive as possible, at the cost of doing business is as low as possible, that our productivity is as high as possible. And the government, of course, in the areas where we have the policy levers, where we have control, we're doing everything we can to be the most competitive, the most productive possible internationally, so that we can continue to strengthen growth into the future.
Well, indeed, the G20 also made the point that more heavy lifting had to be done by governments rather than the central banks. I'm just wondering, now that growth is also trending lower in Australia, the return to surplus must be ever more further away.
Well, the growth rate for 2014-15 is broadly in line with what we had anticipated at budget time. So to the extent that you're concerned about an impact on the fiscal position of the budget, I certainly would not support that proposition. Obviously, the Australian position, the Australian economy continues to grow at a time when we are facing the biggest falls in our terms of trade in about 50 years. When other commodity-based economies like Canada and Brazil are in recession, Australia continues to grow. Now, yes, our growth in the last quarter was slightly weaker than we would have liked, but it is certainly much stronger than it would have been if we had not taken some of the decisions we took over the last 2 years to shed some of the lead that Labor put into our saddlebag over their 6 years in government. I mean, the reason we got rid of the carbon tax is because it was making Australian business less competitive internationally.
Well, there are certainly other economists, for example, Paul Krugman and others, who see us also headed for a recession. And looking at the transition of the economy, when a company like CSL, our largest biotech company, makes the decision to spend $500 million in Switzerland building a plant rather than here, that must have depressed you.
Well, if you look at what is actually happening in the markets, since September 2013, when we came into government, more than 335,000 new jobs have been created. Indeed, if you look at the national accounts and you look at the unemployment data to the end of the 14-15 financial year, you will see that the unemployment rate was lower than what had been anticipated in Labor's last budget. And indeed, the Reserve Bank governor recently said very clearly that the unemployment rate moving forward is forecast to be lower than what had been anticipated due to stronger labour market conditions. And even, I mean, the job advertisements, a good lead indicator, the job advertisements data shows that job advertisements are about 9% higher than what they were this time last year. So we are quite optimistic about the economic outlook moving forward.
But obviously, as a place to do business, Minister, in terms of the reform agenda, we've had this National Economic Summit where really parties agreed that changes did need to be made to super. People are now becoming more open to looking at the GST. There just seems to be a weakness in political leadership to drive some of these changes through.
Well, I don't agree with that characterisation at all. The government has got a clear long-term economic plan for stronger growth and more jobs, and it's focused on bringing down the cost of doing business and making Australia more competitive internationally. We've already done a lot on that front, scrapping the carbon tax, scrapping the mining tax, reducing red tape costs for business by about $2 billion a year, rolling out record infrastructure investment across Australia in productivity-enhancing infrastructure. Of course, the next part of our reform agenda is to legislate the historic and the very important Australia-China Free Trade Agreement, which will give Australian business better access to that key market, will help Australian exporters, in particular in services and agricultural and fisheries products, get better access to that market. And yes, we are also focused on the need for future tax reform. On top of tax cuts for small business, we want to pursue broader tax reform to make our tax system more competitive internationally. But this is all part of a broader long-term plan.
All right, Minister. Thank you very much for talking with us.
Always good to talk to you.